Welcome to PlotLines, where we'll use our over 30 years of experience in real estate communications to uncover the real stories behind real estate. I'm Heather Crowell.
And I'm Britni Acriveau. Dive in with us as we invite guests to break down the ever-changing landscapes of real estate together.
Welcome back to PlotLines, everyone. Today we have Carolyn Morganbesser, the AVP of Mortgage Originations at Affinity Federal Credit Union. Carolyn, thanks so much for joining us.
Thanks for having me.
Why don't you give our viewers a little bit of background on yourself and how you ended up in this this field where we know you have lots of experience?
It was an accident, really. I started as a home equity processor for a now defunct Buffalo-based bank back in 1984, and I got lent out to the mortgage department, and from there I never looked back.
Oh, nice.
And tell us a little bit about Affinity Credit Union.
So we're the largest credit union in New Jersey. We have branches in New York, Connecticut, and New Jersey, obviously. We're very member-centric, community-focused, and my role here, honestly, is to just help our members get into the home of their dreams responsibly and comfortably.
Nice.
Great. Well, I think that pivots well into talking a little bit about the headlines. So our podcast, PlotLines, is all about diving into what's sort of portrayed out there in the press and giving you the opportunity to weigh in. So there's no shortage of headlines, of course, about the home buying market. Even just this morning, CNBC dropped a piece about home buyer mortgage demand continuing to drop further with economic uncertainty. So I'm sure you see the headlines, you live it and breathe it every day, but tell us, is that accurate? What are you seeing from your seat? And what are your perspectives on the home buying and mortgage market right now?
So it's an accurate headline. From my market. I can't speak for the entire country because there are some markets that are moving quite a lot of houses. But here in New Jersey, we are short of inventory for sure. That's like a huge problem. We're seeing a lot of cash offers. Some houses are going over $100,000 over ask.
Wow.
Oh my
We have members who come to us for pre-approvals, and we pre-approve them for their maximum amount. And remember at the opening, I said responsibly and comfortably.
Yeah.
When I pre-approve somebody for the maximum amount, I want to make sure they can still go out to eat or go on vacation or put gas in their car.
Yeah,
Like,
seriously.
you don't want to work solely for your house. You want the house to work with you.
Right.
We have members who are a pre-approval lasts for 120 days. We have members who are on their sixth pre-approval. That's over 2 years they're looking for a house and they just can't find it. Some members are coming back and saying, you know what, I'm just going to rent for another year.
Yeah.
Because I can't. It's disappointing and it's disheartening to go and look at these houses and fall in love and make an offer only to be crushed time and time again.
So is that because it's so competitive?
Yeah,
Sorry, maybe.
I was going to say, is it a pricing issue or a supply issue? Maybe
It's both.
but I think-
It's absolutely both. It's absolutely both. And again, we have a finite amount of money that we're working with.
Right.
Right. The members'
And I guess
income.
also when there's low supply, you get higher, you get pricing.
It's definitely a
competitiveness.
seller's market for
Yeah.
sure. Yes.
Been that way for a long time.
It has.
Well, I guess, are there any misconceptions you're seeing about the market, the environment, the buying environment, pricing, even mortgages generally, like are maybe, everything we've heard and read over the past year is that it's, people, that inventory is low because people don't want to move because they've got lower mortgages right now. They don't really want to buy into a home at a 7+% rate.
Right.
That's absolutely accurate. If I just did this for somebody. So and I'm just using numbers off the top of my head.
Yeah.
So if you took a $400,000 mortgage 5 years ago and got a 3% rate, and you took a $400,000 mortgage now at a higher rate of using a rate between 6 and 7. I use 7%. When I quote rates, I have to quote APR. So the APR on the 3% rate was like 3.089, and the 7% rate, the APR was 7.128.
Yeah.
It was a $1,200 a month difference.
Yeah, that's a lot.
That's significant. It's
That's a lot.
significant. think about your first-time home buyers. They
Yeah.
can't afford that.
Yeah.
So
So
if you have that low rate, are you going to really move and
Right.
go into a higher rate?
Right.
No.
Yeah, it's a vicious cycle then. Yeah.
yeah. So with that, Carolyn, is the buyer profile shifting? I mean, like you just said, I mean, how does a first-time home buyer navigate that?
So
Who is the buyer right now?
So honestly, we do have a lot of first-time home buyers that are still,
Trying.
actively looking.
Yeah.
Yeah, actively looking. Um, and I feel really bad for them because we have to be truthful and honest, and we have to be responsible in how we, guide them because maybe this is just not the time for them to
Right.
purchase.
Right. And they're your
Another
members.
misconception is prices are going to come down. I don't really see that happening.
Mm.
They
Yeah.
might level off, but I don't think they're going to come down. This is not like the 2006 and
Six. Yeah.
2007 market. Banks are not overlending. Credit unions are not overlending. If the house underappraises, the buyers are coming up with that extra cash.
Yeah.
So I don't, and this is again just my opinion, and I'm not an economist. I'm
Sure.
just
Yeah.
me,
Yeah.
just with years of industry experience. That's my take on this.
So is there a strategy you're recommending or that you think buyers can employ to really just kind of like is it just a waited out strategy or yeah, like what are your thoughts or what are you telling your members when
So
they
it depends on the member, right? It's a uniquely personal experience. And I know that sounds kind of cliche and corny, but it's not. It's factual.
Yeah.
Every member is different. Every member's situation is different. If you have somebody whose lease is up and it's not going to be renewed and they must buy now, then we've
Right.
got to bite the bullet and
Yeah.
we buy now, right? If we
Yeah.
That
have
makes sense.
somebody
Yeah.
who their lease is not up or they're living with their parents,
Maybe
then
wait it
maybe we
out.
wait
Waiting
it
it
out.
out. Yeah.
Maybe we wait it out. You save up a little bit more for a down payment so that you can have a comfortable mortgage
Yeah.
payment.
Sure.
Do you are you recommending anything along the lines of like adjustable like are people still doing fixed rate? Are
Sure,
they doing
sure.
adjustable hoping that it comes down or
So that's a great question. So the arms right now, we're pricing them a little bit lower to give
okay.
the member a better
Yeah.
more qualifying power,
Okay.
right? Some people will take the arm. We know you're not going to keep it for the
Right.
entire 30
Right.
years. We don't expect you to, but it gets you in the house. It gets you in
Yeah.
the house with a
Whatever it
lesser,
takes. Yeah.
right, with a lesser principal and interest payment. And we caution our members, be a savvy
Yeah.
homeowner. If you hear, listen, I just had this conversation with the member yesterday. I would love to tell you I'm going to remember to call you when the fixed rates come down, but in reality, I talk to hundreds of people every year.
Yeah.
It's not likely. But you know me. You know me. You call me. You say, what do rates do? I'll happily pull them up and run a scenario for you
Yeah.
to refinance you. A question costs you nothing but time.
Yeah.
Right. Yeah.
Yeah. For sure. All right. Well, I know you mentioned the New Jersey market where you obviously have a lot of expertise. The New Jersey market has its own set of challenges. So talk to us a little bit more about that.
I've never seen a market, and again, I have a long history in this industry, and I'm sure other markets are mirroring it. I don't want to
Yeah.
say that we're unique in any way, shape, or
Yeah.
form, but the amount of cash offers that are being given is, I think, a record high. I
Wow.
honestly think it's a
Yeah.
record high, and they're not little houses. It's not like $100,000 cash.
Right.
Right.
These are 500,000 and up,
With
and they're
high
going for
taxes
cash.
Yeah.
being New
Yes.
Jersey.
Yes.
Correct.
Yes. Yes.
Yes. Correct. There are little pockets of New Jersey that have reasonable taxes,
Yeah.
but
Very little.
yeah, yeah. You said it, I didn't. But yes. And how can your buyer who's getting a mortgage compete with that? Can't
Right.
compete with the cash offer.
Yeah. No, that's tough. Um,
Sellers are under the misconception that, cash offers close faster, and they can,
Yeah.
but that buyer still has to do their due diligence in the form of a
right.
title search. They should
That's
still
right.
be doing septic inspections and well inspections. Now, are they? I can't answer that because they're not my buyer.
Right.
They're not my
Right.
member.
Yeah.
But for our members, we always tell them you have to have the home inspection. even if it's being waived in the contract, which a lot of them are now, you need to know what
Yeah.
you're walking into,
Yep.
Yeah, I was
right?
going to ask. I know when I bought a home a few years ago, we had to waive inspection because it was so competitive. There was like 12
Right.
offers on every home. So, are there anything else that people are doing to try to get creative when they can't compete with a cash offer?
So the cash offer is king. Cash is king. There's no
Or
there's no
if
competing
you can
with
do
it.
it, yeah.
Yeah.
If you can do it, that's what's going to get you in home. But honestly, I didn't think there were that many people that had that much cash, but
Yeah.
there are.
There
Um,
apparently, and they all
I
live in
don't
New
know.
Jersey.
I don't know where it's coming
Right?
from, but
Must
it's
be
there.
nice.
Certainly not me and my family. My own daughter is waiting to purchase. She's been waiting for 3 years to
Yeah.
purchase a home. It's just
Oh,
not the right time, and she keeps
yeah.
asking me. It's just not the right time for her.
Yeah.
But now, like, are you seeing people say, okay, we'll do a quick close or, anything
that's
else
always
to try and be
offered.
attractive?
Yeah, we're telling the members go out, tell them we'll do a 30-day close.
Yeah.
Yeah.
Anything you can.
Yeah. And I want to caution people, you can waive inspection, but you should still do the inspection. It's
Right.
important. It's
Right.
important,
It is definitely.
especially
Yeah.
on a septic tank. I mean, think about those words, septic tank.
Yeah. Not something you want to have a problem with. Agree
And
with you
there
there.
are a lot of issues with septics, and we're
Yeah.
seeing them.
Oh,
And then the member has to make a decision to, if you have to replace your septic tank, it could be as much as
it's a lot of money.
$60,000.
Yep. Yeah. That's a big
It's a lot of
investment.
money.
Yep.
You really need to know what the
Yeah.
condition of the house is. And it's such an emotional process, the home buying experience. And I
Yes.
get that.
Oh,
And
yeah.
I'm 100% in my members' corner. The minute they talk to me, they become mine. I'm very possessive. I'm very, you know, I, I mean, I have a huge following of people who don't even
Yeah.
shop interest rates anymore because they had a great experience with me.
Yeah.
That's the highest compliment. They recommend their children to me, their friends, their family, because they know
Yeah.
I'm looking out for their best interest. I truly, truly, truly advise
Yeah.
well and septic are a must.
Well, so that's great. And along those lines, I think credit unions sort of offer a little bit of a different advantage, maybe. And I can speak to this specifically because my first and second home both were through credit unions because our situations were unique and introduced me to new credit unions. So maybe talk a little bit about the credit union model and what you offer that's different than a bank for a home buyer, or like what makes it special. And then like the second part of that question is what else can home buyers do? Are there like mortgage or down payment assistant programs, or where can they look for that information?
So I can only speak for my credit union.
Yeah. Yes. Yes.
Our credit union, Affinity Federal Credit Union. So we do sell loans on the secondary market. So we underwrite strictly to Fannie Mae guidelines.
Okay.
We're a Fannie seller,
Yep.
servicer. That's what we do. We service every loan, which means I'm going to date myself now. Your check is always written to Affinity Federal Credit Union. Very few people write checks now.
Yeah,
It's usually
yeah.
done by ACH, but that's how I learned and that's how I go. If you don't fit in that Fannie Mae box, I have a whole other set of underwriting guidelines that I can portfolio your loan. So I can hold it
Okay.
on my books because every peg is not square or round, right?
Right.
I
That's
said
right.
at the beginning of this conversation, it's unique. It's a unique
Everyone's
experience to each
circumstances, yeah.
person, right? So
Yep.
that's where we're different. A lot of credit unions do portfolio. A lot of them strictly sell. It's not right or wrong. I think the credit union model as an industry, we're cooperatives. We're owned by our members. We don't answer to shareholders.
Yeah.
The member is key. The member must be serviced and satisfied, quite frankly. We have to make sure and strive every day that we provide the best service for our members. They're not a number. They're a name.
Yeah.
They're a name.
Yeah. Love that.
Second part of the question, down payment assistance. You can look at your neighborhood housing associations, your state, your county. Sometimes they offer down payment assistance programs. Some of them have income requirements
Okay.
or
Yeah.
census tract requirements, the area where you're buying, and some don't.
Yeah.
So you really, as a home buyer, potential home buyer, you have to do your homework.
Right.
Makes sense.
Yeah. It does make sense.
Yeah. Carolyn, is there anything we'll get into our question about having you rewrite the headline, but is there anything we haven't covered yet that we should be considering?
So it's a great question. I wish I had like this really great answer for it. I don't. I always tell people conversation costs you nothing. So if you're thinking about buying, if you just want to start the journey, give us a call, right? Because even if you're not ready now, it's never a waste of time because we can prepare you and get you there. We can help you with the budget. We can work on your credit if you have credit issues. We can give you like the best tip of advice I always tell my members once they start this process is don't open a new credit card. Don't buy a car. Picture the angel and the devil on your shoulder and then picture my face and then call me and ask me. Now, to take that a step further, I had a member who was in the process of purchasing a home. She had her commitment letter from us and her car died on the New Jersey Turnpike.
Oh.
And she called me from the side of the road and said, it's a 2002. It has over 100 and something thousand miles on it. I said, you have to buy a car. But I was able to tell her max car payment.
Oh, nice. Yeah. So, keep her within that same.
So her qualifying ratio was not affected.
Nice.
That's a big deal.
Yeah.
That's a big deal. So that's what I would tell people. If you're ready, if you're not ready, if you think you're ready, or if you want to be ready, give us a call and start a conversation. We'll work with you. I worked with that particular member with the car for 18 months before she was ready to buy.
Wow. Nice. Yeah.
I mean, it's the biggest financial decision you're going to make in your life, right?
Correct.
So
Correct.
have someone in your corner who's going to guide you through it.
Yeah.
Yeah. Definitely make an informed decision.
Yeah, exactly.
Yes.
All right, Carolyn. Well, we want to circle back to where we started, which is I had asked you about your take on headlines. And so what would your headline be if you could write your own?
This too shall pass. So the rates will come down. Again, my opinion, not an economist, I don't think we'll go back to the 3s again.
Okay.
I think maybe I'd be real happy with the 5.
Sure. I think a lot of people would be happy with 5s right now.
Percentile range.
Yeah.
And then inventory should become more available.
Free up a little
If I
bit,
could rewrite the headlines, that's my headline.
There we go.
Like it.
I
We
like
just
it
have to be
too.
patient, right? Yeah.
Yes.
Yeah.
Yes.
Been that way for a bit, but
Yeah. All right, Carolyn. Well, thank you so much for joining us. We really appreciate the conversation.
Thanks for having me.
This podcast is a production of Gregory FCA. If you enjoyed our discussion, please subscribe wherever you listen to podcasts